In this video, I'm going to show you a trading strategy based on the one free indicator that is available on TradingView plus a common sense that I'm going to deliver in this video. Okay, so first of all, guys, if you are not watching my free advanced trading video course, then please go to my playlist. The playlist is available on my YouTube channel and find the advanced free trading course. And I have uploaded 5 lectures so far. And exactly right from the lecture number 1, my students who are following this course wisely and they are not skipping the video, they are watching each and every part. And this is not a very long course. This is the simple to the point course, and just watch these 5 lectures that I have posted on my channel, and the more will come sooner. And guys, if you watch those lectures, you can be a profitable trader with no problem, because my students started to make money from trading exactly from the first lecture. So please check the playlist of my YouTube channel. Okay, number second, we are going to talk about the indicator, because everyone is using the divergence indicators very wrong, because they are finding the divergence on everything and they are simply entering into the buy and short positions very badly. Okay, because they are taking it in a wrong way. They are trading against the banks. That's why they are not profitable. Okay, so first of all, you need to watch this full video, because I will tell you which divergence can be trusted and which divergence cannot be trusted. Okay, so this is the free indicator. So first of all, let's attach this indicator on our screen so that we can get started with this video. Okay, so you need to write ultimate oscillator. Okay, so when you write ultimate oscillator, then this indicator will come, that is called ultimate oscillator plus divergences, and the name of the author is some phantom, and you can see we have 282 likes already on this indicator already. Okay, now once you attach this indicator on your screen, so basically this will looks like divergences and something like this, and I will explain you that how we need to tackle this indicator. So first of all, go to the settings, and all we just need is to do with the uncheck the labels, because we will not play with the settings. Because if you follow my videos, then you will know the settings are the good thing that is in your mind, not on the indicator. And that is why I do not focus on the settings part in my videos most of the time. Okay, so right now, what we see here, okay, just look at this chart, what you see here. Okay, first of all, I'm going to tell you that what you see here is that this is the support level that the market has created in the market. Okay, so this is the sport level. So what is this sport level for? This sport level is basically a liquidity pool, because we have so many touches over there. This is the liquidity pool that is created by the banks, and they intentionally create such type of levels in the market so that retail traders can make a loss, because when they consider that one a sport level, because you can see one touch, second touch, third, fourth, fifth. So what do you think, that these touches are going very well? No, they are going to break. They are going to break into your against you, because your stop losses are available below that support level. And look what the market has done. The market has done the stop loss hunting here. Okay, now when the price is at the support level, then even you will not sell from the divergence. Like you can see the upper divergence, it was red, and not you will be going to buy from this support level, because you know very well that the banks operate against the retail traders. Okay, so now you can see that even it has given you us the bearish divergence here. We will, yes, if you are a good stop loss trader, if you know very well that if you can understand exactly from this candle that the market is going to break the support level below to eat the stop losses that are available on the downward side, then you can go with that divergence if you are go enough. But if you are a beginner and you are not a advanced level trader, then what you need to do, look at this. After the stop loss hunting, first of all, you will wait for the stop loss hunting and wait for a proper couple of bullish candles. Look, you can see you got two bullish candles here. That was a single, no, we cannot trust that one. But here we got a two bullish candles, and then check the divergence, it was the green divergence. Now you can go for that trade. You can see the price is up. Okay, now I'm going to prove this thing on many charts, and you will simply realize that really it happens very well. Look at this. This was another support level that the market has created, okay, for AUD CAD 1 hour. You can see definitely if someone is if the retail traders are buying from here, then definitely their stop losses will be lying below that level. Look at this. The market has first of all shown you the couple of bullish candles, and then they went against you. So sometimes if you are a pro trader, then you can go for a short from here, but I will not recommend. If you are not a pro trader, if you are just a beginner, do not take a sell in that case. Instead, wait for the market to take the liquidity to take the stop losses, and once the stop losses are hunted, okay, so what was the previous divergence? The divergence, now you can trust this divergence, that is the green one. Now simply go and take a bullish trade and just look at the right that has went into the upward side. Okay, so guys, and also the second thing was there. If you just look at here, the oscillator that is on the screen right now, it was also oversold here, and you can see a divergence. Okay, now let's talk about the third example. I'm just picking the random charts. Okay, now you can see here that we have the support level that was created here, and that becomes a liquidity pool. And then retail traders were thinking that the price will go up from here, but actually what the market has done, the market has done the stop loss hunting. And after stop loss hunting, now you can see this is the better, the more at the discounted price you buy, the more, like buying here on the single bullish candle, this is not advisable. And these are the poor, like very weak candles that are appearing here. So at least find some good candle that, like, this is the good confirmation that is going right now, because we have two good strong like reasonable bullish candles, so we can trust that one, and we can consult the previous divergence. So guys, the market operates based on the liquidity. And if you have not watched my lecture number 1 to lecture number 5, go to my playlist and find these lectures in for free on my YouTube channel in the name of Advanced Free Trading Course, and then use any indicator with a particular common sense. So hopefully you like this video, and you can be a profitable trader if you follow my advice and you practice on the few days on the demo account, and then you can be simply a very good trader. Okay, now one more thing. If I open my custom indicator, that is called the market turning points indicator, look, this is very over smart. That was the support zone for the market. Okay, first of all, it has took you into the sell ride, because it knows very well that the market is going to take the liquidity on the downward side. And after the market has hunted the liquidity, now just look at my market turning points indicator. It has immediately plotted you a best area to take a buy position from the buy opportunity here, and the price can now go into the upward side. And if you want to book the lifetime version of my powerful indicator, that is called the market turning points indicator, then you can contact on Telegram, you can contact through email. The links are given in the description of this video. Thank you very much.